The crypto market is well known for its volatility. Prices can fluctuate dramatically in short periods. It's a common adoption challenge that both consumers and businesses face. Volatility was especially rampant in the early days of Bitcoin. For example, in 2011, Bitcoin dropped from $31 to only a few dollars just over a few days. With a more positive trend throughout 2017, Bitcoin went from $970 to $20,000 for almost 2,000% increase. In 2024, its price hovers around $60,000. While the rise is tremendous, there is no denying the lack of stability for less popular cryptocurrencies that can be going from dollars to cents in a single day. Prices of coins and tokens aren't solely determined by trading activity on exchanges. External factors like regulatory news, technological developments, and macroeconomic events can significantly impact market sentiment and prices. The market is relatively new and less regulated than traditional assets, making it more susceptible to speculation and hype. High volatility isn't just a threat, it's also an opportunity. You can profit from price swings by trading the right digital assets at the right time. However, this requires careful analysis, risk management, and strong understanding of market trends. Depending on your approach, volatility can be your friend or foe. Crypto is exciting for traders seeking profits, but it's deemed risky for businesses. However, if we look at the general trend, Bitcoin has actually been getting more stable over the years. People usually use crypto as a hedge against inflation or as another asset in their portfolios. And merchants can also take advantage of that. But suppose you are not interested in dealing with price swings at all. You're just looking to accept crypto payments without worrying about the prices. In that case, there are two answers. Use the crypto processing payment gateway. We talked about it in the last lesson. Our gateway hedges transactions for some time after the initial request to combat any immediate volatility. This ensures that you get the exact amount that your customer agreed on at the time of the payment. Second, take advantage of stablecoins on automatic conversions. Stablecoins were created to address volatility. They are cryptocurrencies designed to maintain a stable value by using pegged to an asset like US dollar, gold, real estate, and so on. This makes them a more reliable option for everyday transactions and payments. The most popular stablecoins include USDT, USDC, and BUSD. All of them are pegged to USD, so their value remains relatively predictable as it follows the dollar. Issued by different providers, the stablecoins typically account for 90% of the crypto market volume every month, due to their usefulness in measuring the value of other crypto coins and tokens. As a merchant, you can choose to automatically convert any crypto payments you receive into stablecoins to avoid the risk of price fluctuations. This will help you to protect your profits and make easier to manage your finances. Let's say your customers are paying you in Solana through your website. You can take the Solana, convert them in USDT through the exchange, and store the dollar value in your wallet without worrying about Solana going down the price. You can even take a step further and automatically convert your USDT to a bank payout in regular dollar, euro, or other currency. At Crypto Processing, we also integrate a variety of exchanges, providing access to multiple liquidity pools for the most competitive rates. You can easily connect your bank account to receive compliant fiat payouts without ever having to worry about volatility. Let's take a look at another common challenge of crypto payments that holds true for both businesses and customers. If you aren't tech savvy, the process of buying, storing, and spending crypto can seem daunting. Even after we talk about keys, wallets, payment gateways, and so on, there's still a concern about how to put it all together. This Deloitte survey from a few years ago paints a picture. Roughly 15,000 businesses accept Bitcoin right now. That's a drop in a bucket compared to the number of businesses out there. Not even 0.01% of these hundreds of millions. Interestingly, it's also way below the number of people who actually hold crypto globally. That number is around 560 million people, which is around 7% of the world's population. So businesses are underserving the market of crypto holders at this early stage. It's an opportunity as much as it's a challenge. Yes, crypto takes some tech savviness at this stage. However, that's changing rapidly thanks to solutions like crypto processing. Hundreds of companies like ours have been working over the past decade to make crypto accessible and easy to use for everyone, regardless of their technical prowess. At this point, most merchants can get ahead of a rapidly growing market by adopting crypto first and serving a growing customer base before competition jumps in. Crypto transactions have several advantages over traditional payments, including price and efficiency. There are no intermediaries like banks, which reduces fees and potential points of failure. Crypto transactions have a higher clearance rate and lower fees due to fewer parties involved. Speed. Crypto transactions tend to be significantly faster than bank payments, especially cross-border transactions, which in current financial system tend to take several business days compared to clearing almost instantly with crypto. Security. Cryptographic techniques protect transactions from tampering and unauthorized access. Blockchain records are also easier to audit, lowering the risk of fraud. Security is a key topic, so we'll cover it in the later lesson. Programmability. Blockchain payments allow for unprecedented automation and customizable payments based on specific conditions. This is especially useful for Forex and iGaming and various tech platforms. Overall, crypto promises to be cheaper, more efficient, and easier to make payments. And that's well worth overcoming the hurdle of complexity with blockchain transactions. Let's talk about how to do that in more detail. Most businesses are concerned about slotting crypto payments in their existing financial structures. And it makes sense. Cash flow is a lifeline of the business. And even the smallest disruption in payments could send the enterprise into the death spiral. Cryptocurrencies started out as a separate technology, mostly divorced from traditional payment system, creating their own alternative track. The internet also used to have a significant learning curve to even access the online chat via BBS, to forums, to messengers, and now the ability to reach the whole world is just the click of a button or a tap of a finger. Similarly, crypto has progressed from downloading complex, cumbersome clients to simplified wallets, website integrations, and finally seamless payment gateways that integrate fiat and banking, such as crypto processing. So how do you integrate crypto payments into your existing process? There are three broad options. Use plugins and no-code integrations. You are familiar with this if you run an online store and already use something like WooCommerce or Magento. Crypto payments can be integrated directly with your website depending on its infrastructure. Take advantage of API tools. Large enterprises don't use out-of-the-box solutions for security, finance, and business reasons. You can simply use the API of a payment gateway and wallet to slot crypto into your flow seamlessly. Explore personalized solutions. Perhaps your payment system is so deep that it requires an entirely custom integration. Companies like ours specialize in creating custom crypto payment solutions for all sorts of applications. For physical businesses, there are even point-of-sale terminals that operate similarly to credit cards. Traditionally, debanked industries like CBD take great advantage of this in America. With all these options, there are countless ways of integrating crypto payments that don't disrupt your existing system and even complement it. Whether you want to automatically transfer your crypto to a cold wallet for safekeeping or trade it for fiat and receive payouts to your bank account, all of this can be achieved with relative ease. Crypto processing offers integrations with zero fees because we want to facilitate crypto as a global standard of payments. We believe crypto payments are just one step to a freer, better world. Blockchains are quietly transforming the world while you are watching this. The idea of Web3 relies on slowly restructuring the internet user-focused and decentralized. Many of these changes are happening under the hood without changing the user-facing side of things. There is works happening on many fronts. For example, Vitalik Buterin, the founder of Ethereum, recently began exploring account abstraction. If implemented, it would make managing crypto wallets even easier. As these things become a reality, we can unlock programmable payouts. Smart contracts that lock and release funds based on specific circumstances, such as job being completed or winning sports bets. This means freelance marketplaces, iGaming, and other online businesses can use blockchain to automate payments, increase trust, and reduce the possibility of fraud. Borderless payment networks. We've mentioned cheaper and faster international transactions earlier, but crypto payments can go even further than that. We can facilitate seamless transfers anywhere where crypto is legal, near instantly solving the challenge of nearly 1.4 billion unbanked people today. Tokenization of assets. Every asset can be represented on the blockchain, which can be proven and tracked. Stablecoins like USDT and USDC make great use of this, as we discussed. However, it's just one relatively simple use case among many. Most large banks, from Deutsche Bank to JP Morgan Chase, are particularly interested in this use case to represent collateral, property, etc. We attached an article discussing various blockchain use cases for details. Getting ahead of this market today is well worth the possibilities unlocked in the future. This concludes our module on crypto payments and their general challenges and promises. Let's recap this lesson. Businesses can hedge against volatility with stablecoins or payment gateways like crypto processing. While crypto adoption in businesses is growing, it's still relatively low compared to the number of crypto holders. This presents a significant opportunity for businesses to get ahead of the curve. Crypto payments offer benefits like lower fees, faster transactions, increased security, and programmability. Integrating crypto payments can be done through various methods like plugins, APIs, or custom solutions. Payment gateways like crypto processing make this process seamless. Blockchain technology has the potential to revolutionize payments with programmable payouts, borderless payment networks, and asset tokenization. Think of the enormous resources spent providing credibility and trust in our economies. Now imagine what happens when technology can automate this credibility instead of putting it on the third parties and institutions. Why not take advantage of that in your business? In the next lesson, we will discuss the security and regulatory landscape of crypto payments to help you stay safe and compliant while using crypto. See you there.